We are live. Welcome, everybody. Today is Tuesday, the 19th day of auspicious August 2025. I'm Gianni Di Poce. We are live here. I'm still broadcasting to you from central Italy. And, it's still the same weather pattern that we have been experiencing here over the last, really, I'd say week or so. We have these beautiful, sunny, warm, comfortable mornings. And then around 2 o'clock in the afternoon, the storm clouds roll in. It starts to rain, thunderstorms. It's very pleasant, not like thunderstorms that are causing any damage or risk of life, risk to safety or whatever. But it definitely brings cooler temperatures into the evening, and it almost feels like fall at night. Professor handed off by talking about technology and Palantir. I do want to talk about AI sentiment because it's amazing how a few weeks ago it was AGI, like our artificial general intelligence is here. ChatGPT has basically become that, and then a week ago it was ChatGPT 5 was a dud. And now it's, AI is a bubble and it's going to pop at any time. So I want to talk about some of what we're seeing in AI. It's been a sector that has been pretty generous to me in terms of helping padding performance and returns in the market overall. I do want to talk about what's happening in crypto because we're seeing a bit of a sell-off now, and the panikins are back, as we've been calling them. Every time there's a dip, even just a few percent, or just more importantly, just a few days from the high, there's a certain level of, this is over, this is it, like an irrational hysteria that's coming into the picture. Meanwhile, all we're doing is trying to complete a higher low with respect to the trend. We talked about trends some yesterday, and I think that it's something that really helps keep you calm, cool, and collected when the media hysterics are increasing on that front. So we are also in the eye of what I'm calling the crypto hurricane. So, if you have not participated in this rally in crypto, you may have an opportunity to make some allocations here in the not so distant future. Now, obviously, right now the big thing the market's paying attention to is the peace summit that we're trying to um, create, trying to end the war in Ukraine between Ukraine and Russia. So we had Trump meet Putin last week, and then we had Trump meet various European leaders at the White House yesterday. Looks like now Putin and Zelensky are set to meet. So yeah, I mean, wow, how could the market react to either an escalation or a de-escalation? Surface level, we know that markets don't always respond like this, but we can talk about it in general because it is an exercise that I think helps you understand how markets don't always follow logic, right? So if we do get a peace deal, is that going to send markets soaring? Is a big period of, or a temporary period of prosperity and global economic growth going to come through? Because we know that nothing lasts forever. Unfortunately, that is the very nature of the world that we live in, both in markets and when it comes to geopolitical matters, right? There's going to be another war at some point. Like we're not just going to have peace forever. I know that that may not be the warmest and fuzziest thing you've heard all day, but when it comes to trading and just approaching life in general, I think it's important to have that sort of realistic expectation. So I think the main risk in the tape right now is geopolitics. If things don't go well near term, then it could be a reason for stocks to sell off pretty hard. Technology is not leading right now. We saw healthcare come out as the best performing sector on the week last week. It is a bit of a cautionary signal. I mentioned yesterday, like, hey, I'm not coming into this week ready to take on a bunch more risk and not ready to swing for the fences. It's not all, head for the hills, Katie bar the door type of price action that we're seeing. In fact, we're seeing a pretty notable rotation take place, even abroad. I was actually talking to a friend of mine that lives in Hong Kong this morning. We have a bit of better of a time difference between us now that I'm here in Europe. And Chinese market's getting very, very bullish. There's a lot more optimism coming from the Chinese public. We've been talking about this, and it's not just based on the price action that I've seen that I've been commenting on, like, hey, you need to be paying attention to China because it's a market that has a tendency to exhibit very large price moves. in short periods of time. We've seen it happen time and time again throughout history. And so I think there's a big opportunity there, but it's also being validated and vindicated by people that I'm talking to on the ground over there. So I wouldn't sleep on what's going on over there. But I do want to talk about, the mindset, matters when it comes to trading, as we normally do. I always think that's a really important part of what we do here on a daily basis. And today the theme is protection comes with a cost. Protection comes with a cost. So, Don likes to talk about the insurance on his home, right? In the islands, that is a cost, right? Insurance is protection. It costs something. Nothing is free in this world. So whether you're hedging your portfolio, whether you're doing it by options, or if you're trading futures, or however you decide to do it, if you're selling covered calls, if you're buying puts, there's a few different ways that you can hedge depending on which side of the market that you are trading. Now, I am more of the type of trader, if we are still in the bull market, to kind of use cash to pad me on the way down. I have come to accept and embrace market pullbacks. I'm not the type of trader that needs to see my account growing every single day, because that's not really realistic. But I treat my own portfolio value similar to a trending market. As long as my portfolio keeps making higher highs and higher lows, I am willing to accept that risk and not just, pay a market maker to hedge me for a little bit. And, whether or not that works out in the long run, in terms of buying protection, it depends. It really depends. Sometimes the protection is worth it, but then if it doesn't, then, you just basically gave away alpha, you gave away performance for protection. So I don't necessarily, I'm not a trader that embraces fear in that respect. I'm a trader that accepts the risks. And I understand that I'm not going to be catching the exact high or the exact low. There is plenty of meat in the middle for me, and you for that matter, to make a living. So, my cost is account fluctuation, right? Your cost may be the premiums that you're paying when it comes to options. It just depends whatever type of trader you want to be, and you can experiment and figure out what works the best for you. So that's what we have going on over here. I do want to jump over to thinkorswim real quick and check what is going on in the chat room and see who is all in here today. Appreciate you guys tuning in. I'm going to be with you until the bottom of the hour. We have Greeny, Tim, Mari, John J, John G, Rosario, Bon Pomeriggio, Roger Bro, Brian, how's it going? SHP, Cal. Yeah, we are seeing some selling coming across the markets. Portfolio is off the highs today, but so is the market. And right now I'm just looking for that higher low. I think we could bottom as early as later this week, early next week. So that's my approach right now. I think it's looking pretty strong. Overall, nothing to be too concerned about at the moment. Nance, Les, Randy, Nora, Mark, Rio, Steve, Two Carter. Appreciate you guys tuning in today. Calvin, thoughts on Bitcoin? We'll definitely talk about that. I think that we have a dip buying opportunity setting up there as well. And of course, we're going to be looking at some of the names that we've been long, some of the opportunities that have been coming in this market. And, just want to be clear, there are plenty of opportunities still in this tape. Gaston, how you doing? Thanks for tuning in today. All right, so let's go ahead and continue on with the currencies. So, we've been talking a lot about the importance of currencies, the role that they fulfill, the purpose they serve, how they can help you manage whether money is flowing into or out of a country at any given point in time. Basically, if a country's currency is rising and their stock market or their bond market is rising at the same time, then it means that money's coming in. Now, just because a currency is going up doesn't automatically mean that money is going into a country, because it could mean that they're suffering from deflation if their currency is going up, but their asset values are going down. So you have to look at these markets from a relative standpoint. and understand that it's not all absolute, it's not all cut and dry. This market moves and is understood on a relative basis. It's not absolute. The only thing that is absolute, I mean, you can even say like your portfolio returns are not absolute, because the fact of the matter is that, even if you, let's say you did 30% in a year and inflation is 5%, your real return is only 25%. You only got wealthier by 25% because inflation ate away 5% of your portfolio value. So I think that a lot of times we get lost in the infatuation or the love of nominal returns. But let's never forget that we all live and die by real returns, right? So if you get a 2% raise on your salary and then inflation's 7%, well, you're actually getting paid less, right? Because all that matters is what your money can buy, not the number amount. I mean, we can all, I always kind of make the joke, we should all be millionaires. We should all make $1 million a year in a salary, and then, everyone's going to be rich. Well, no, because then the price of everything is going to go up comparatively. That's why it's important to understand how and why things work, right? We don't like to live in fantasies. We don't like to live in pipe dreams. We like to understand and embrace the irrational moves of the market. People don't behave rationally. They move on a whim. They move on a hunch. I mean, do you see like some of the commercials like promoting gambling and whatnot out there? Like, oh, if you got a hunch that this player is going to do this, make a bet. Well, guess what? Unfortunately, a lot of people in the market do that. We are not doing that when we make our decisions here trading at TheoTRADE. I'm not just coming in here, guys, I woke up this morning and I just got the hunch that bonds were going to sell off. No, no, that's not what we were looking at. So anyways, dollar's pretty much flat on the day, down slightly as a matter of fact, but I do like the idea of this being a higher low, uh, getting carved out here in the dollar yen. So I've talked about the consequences of, if the dollar starts appreciating against the yen, the carry trade could come back into the picture. Carry trade is just when you sell the lower yielding currency, buy the higher yielding currency, and it's the central banks that set those rates. So the Bank of Japan still has like 0.25% on the short-term rates. US, we're still above 4%. So you sell the yen, buy the dollar, and you're basically clipping the difference in those interest rates. Now, in theory, there's still a carry trade in effect between the dollar and the euro. European Central Bank has their rates around 2%. US is still higher. So why has the euro appreciated so much against the dollar year to date, despite the European Central Bank cutting rates while the Fed has kept them steady? Well, it's been politically based, right? So currencies don't just move based on interest rates, they move based on war-related matters, trade-related matters, and the currency value is taking all that into effect. So, here you see the dollar against the euro, which is flat on the day, but I'm not ruling out a lower high being complete. I'm almost considering another short opportunity in this market. We did get stopped out of one recently, and I think it was right at the high, unfortunately, and so we're looking for that to happen again. In other words, I'm looking for this to roll back over, potentially take out this low if we can, because if we do, then it's going to mean good things for the dollar. Now, you've been hearing me talk a lot about China. I do think that China has a really good opportunity to make some good money. I think the European trade is a little extended. I'm not ruling out the US market catching up to its European peers, and then maybe the European markets continuing their outperformance afterwards, because, it's been basically 6 or 7 months straight of European stocks just absolutely killing US stocks. Now, for perspective, US stocks have done a lot better, in the longer run. They've, over the last decade, 2 decades, US stocks have been the place to be compared to European stocks. There was a period in the 2000s where emerging markets did very well. But for the last, 10, 15 years, it's been all US, all tech, all growth, all exciting things happening there. You take a look at the euro against the yen here. euro against the yen kind of going sideways. Looks to be that the yen is the weaker currency here against the euro. So we could eventually see the euro going to make new all-time highs against the yen. And again, this reinforces the idea that the yen weakness is going to continue and that the whole leveraged carry trade thing is going to keep going on. So the Bank of Japan has been a little bit more reluctant to I guess go back to being dovish like they used to be. They were the most dovish central bank for many years, and we talked about Ben Bernanke being involved with them, and so yeah, that's what we're looking at. As soon as we get the signal from the Bank of Japan, I think you're going to see the yen really drop hard. So let's go ahead and jump over to the bond market, take stock of what's going on here. So we're seeing a little bit of a rebound here in the bonds. You did not take out that low from yesterday. And so we were looking for a bottom. This could keep chopping around. Is this a little bit of a flight to safety coming in? I mean, stocks are selling off across the board, suggests a little bit of caution here. So, ZB, ZN, they're all up. We've been looking at the 2-year note eventually breaking out from this range. So the dollar's flat, bonds are up, stocks are down. This is more, from that standpoint, not a day to take a risk. So we came in yesterday saying, hey, I'm not ready to get aggressive just yet. Still have some cash in the portfolio that I'm waiting to deploy. I'm not getting too eager to do so until I get the signal to where I can add risk in this environment. But what I'm seeing here, guys, the rates are coming down. The big question is, because we've seen this play out in Europe actually, and there's been some other instructors here that have really pointed that out astutely, is you've seen the European Central Bank lower rates, you've seen the Bank of England lower rates. They brought short-term rates down, but long-term rates have still gone up. And that's because when they're lowering rates, they're printing money. And so the bond market is not stupid. The bond market's very smart. And they basically figured out that, hey, that money eventually is going to lead to some more inflation down the line. And so the longer term bonds tend to respond and be a little bit more sensitive to changes in those inflation expectations versus the others. So this is what we're looking at here in the bond market at the moment. So I wouldn't be surprised if we saw bonds trying to take out this high, especially if we get a little bit of selling in stocks. That high from earlier in the month is a candidate to be tested or even taken out to the upside. If we make a lower high, we're probably just going to run off the clock on this cycle. And then I'd be looking for another low in bonds to come in a few weeks. But honestly, the stability in the bond market has been okay. I don't know if you guys have caught anything on the repo front. Some of the repo reserves, I'm not going to get into that today because we have to get, spend, a quarter or a third of a session, just on that conversation and the nuances and details about it. But if you are curious and doing a little bit of research for yourself, that's something you can look into. So yeah, that's something to keep in mind here. Sorry, my phone's just going absolutely nuts here. Okay, we're good. So on the bond front, inflation is not an issue yet. I do want to talk about crude oil some. Crude oil is selling off. We've not been bullish on crude oil. But what we are seeing unfold now, okay, is bullish bets on crude oil have fallen to 16-year lows. Isn't that something? Okay. So I've been saying crude oil's time is coming. It's not here yet, but it is coming. Now, when I say it's coming, I don't think it's going to be next week. I don't even necessarily think it's going to be next month. But I do think there is a final climactic low getting ready in oil. And then we're going to see this market, this industry really come back to life. And what's been interesting is over the last week or two, you've seen a lot of the solar stocks try to come back to life. You've seen nuclear stocks do well. I'm keeping an eye on lithium too. That kind of ties into solar, but petroleum, traditional energy has not done that well, and it's become such a small part of the S&P 500. So, 2% of the S&P, this isn't going to make or break the market, but when it starts outperforming and everything else starts underperforming, then that's where it becomes an issue. That's where it becomes an issue. Okay. So, that's one of the things I'm watching here in the energy space. XLE, XOP, that's still kind of quiet, not much going on that front. So with that being said, we can go ahead and jump over to stocks. We are back at the lows of the day. The Nasdaq is leading the sell-off lower. We're down about 1% on the day here. Yeah, it does look like we're buying and positioning for more downside here. But like I said, we hit a new we haven't hit a new all-time high this week, which is good. Let's see, the Dow did not either. I would love to see this market bottom as soon as next week. The Dow is actually off the lows of the day, pretty much flat on the day, showing some resiliency. It just turned negative now compared to the Nasdaq, and you are seeing chips, semiconductors selling off, but not more than the Nasdaq. It is down more than the S&P. So combined with bonds being up, stocks being down, the dollar being flat, this is risk off, guys. There's a reason why I came back in yesterday and said, hey, like I'm not coming out here and just taking risks just because we've been making money on the long side. Like I recognize and understand, could see some drops, could get some stops triggered on my positions, but at the end of the day, I'm comfortable with my position sizing. I have embraced, and accepted the outcome of a trade. When I take it, it's going to work or it doesn't. If it becomes painfully obvious that it's not going to work out, sure, I'll close it. But I'm okay. Also, I've been rewarded in the last 4 months just letting these trades ride out. So very, very important stuff to understand there as well. But yeah, I mean, you can see here we're pretty much at the lows of the day. It looks like we are going lower here. The VIX is starting to pop up and come alive. Makes me wonder if there's some developments going on with the whole peace talks that may not be circulating at the moment because yeah, it doesn't look all that good right now. Yeah, I mean, portfolio is down. It's not like the worst day I've ever had by by any sense of the term, but yeah, we are down. Some of the high flying names giving some of it back right here. Let's take a look at some of the big tech names. Apple actually holding up pretty well. Tesla was up earlier, just turned negative. You take a look at Nvidia, that's down some, but we hit a new all-time high last week. We do have Nvidia earnings coming up. Is that next week? 27th? Yeah, next Wednesday. Nvidia earnings coming up next Wednesday. So that is a potential reversal candidate, right? If we have blowout earnings in Nvidia, I don't really see this market rolling over. Other chips are down pretty notably too. Broadcom, AMD, stuff like that. But we could easily form a higher low here, reverse back higher. Micron, we've been looking at this setup in Micron that hasn't triggered yet. I still like it quite a bit on a close above 127.91. And there's other things in the semiconductor space that are moving as well. So you have technology that's down about 1% on the day. Chips are down about equally. But let's take a look at some international markets. China is down less than the Nasdaq. It is down a little bit more than the S&P. You take a look at Germany here. Germany's up. Poland is up, actually hitting a new high. Greece, Grek. Greece is flat on the day. So European stocks holding up pretty well right here. So yeah, I think that's something that we need to continue monitoring in this environment, because again, I think the big rotation is going to be into China, Chinese tech, Chinese AI. That's where the innovation abroad is coming about. Let's see, check the chat here because I've been ranting. By the way, guys, real quick, um, I hope you were able to join me tomorrow. I'm going to be going live with Don discussing freeze points. So it's something that we've been working on here at TheoTRADE. I think you'll be very pleased and interested in what we've got going on. So, what's wrong, Nick? What do you mean? Something wrong? We good? So I hope you guys are able to join me tomorrow at 2 p.m. Eastern. We're going to be live talking about the freeze points, what we got going on there. So let's see. Did we jump? I jumped around here a little bit in the chat. Brent says the Wings don't make the playoffs again. Well, if they don't make it this year, I don't know, Steve Yzerman, wouldn't that be sad if Steve Yzerman got fired from the Red Wings? Ken asking new target on LQDA. We did book profits on that yesterday. What is the next target on this one? This looks pretty good. Yeah, I'd look for this to go up to like 38, but right now I think the main strategy needs to be managing the stop. I still like it at 21.61, but this is one I think that could eventually go as high as $38 per share. So, okay, it's not me. Yeah, very good. Oh, you were asking Tim what was wrong with the small caps. I see. Yeah, my bad. Okay, so that's what we're seeing in some of those names. Let's take a look at precious or excuse me, crypto. You have that Bitcoin. Did we take out that low from 113.045? Not yet, not yet. So I wouldn't be surprised if Bitcoin tries to find a low here in the coming day or two. That's what I would be looking for. Find a low here in the coming day or two. And if Bitcoin starts to lose 113, yeah, maybe you do get a drop back to the 100K area. I think that'd be a little bit dramatic, but it would certainly serve to reset some of the sentiment. Yeah, I don't know if you'll get that down to 100K. That's a little exaggerated. I do think we're in the process of hammering out a low here in Bitcoin. Ethereum is also pulling back down a little bit more on a percentage basis compared to Bitcoin. And so, yeah, we're going to be looking for this support right around like 4,000, 4,200. We're in that zone right now. I think we could be bottoming here very soon as well. So that's good. We still have that long position on HUT that's open. It's getting hit pretty hard today. But we've been up pretty good, guys. Again, that's why we have been a little bit more defensive. A little bit more defensive coming into this week. So let's go ahead and take a look at precious metals now. Gold is also down, silver's down harder. So everything's getting sold. Yeah, I mean, VIX is up, the dollar is flat. I mean, how's the dollar index? Starting to turn up. Bonds are starting to turn up. This looks like classical risk off, guys. Looks like very, very classical risk off. So that is the lay of the land that we're seeing in this environment. Let me go ahead and share some of the other information I have with you. Want to talk about AI and some AI stocks, see what's going on in there. Is the AI fallout overhyped? Because, people talk about, oh, AI is going to replace all these jobs and, white collar work is going to be completely devastated in 5 years, so on and so forth. Is that the type of sentiment that you would see near the bubble? And let's just take a step back for a moment and think about what the internet did, for example, to brick and mortar. Did the internet completely destroy brick and mortar? No. No, it did not. It destroyed a lot of it. It completely revolutionized it, right? Amazon did a lot of that, right? But when you think about the changes there, I think you're going to see a lot more niche material, a lot more niche professions amongst humans in that stuff. And, kind of just like those adult daycare jobs. Hate to call them that, but they do exist. We all know those jobs, and we all know some people that work them. Doesn't mean they're bad people. I think they're great people in many cases. They're just, out there trying to earn money like anyone else are. I don't think anyone else is. But a lot of these AI uh, endivores, right? All these AI projects, um, they're not really sticking. They're not sticking. So they'll either fail, they go bankrupt. A lot of them are not really making that much money yet. So you've been hearing these stories about how these like these open AI and Meta are like offering these AI employees like billions of dollars salaries hundreds of millions of dollars, just insane. So that's, obviously something you see near the top of a market too. So yeah, I do think AI is going to absolutely revolutionize and change the world. We're already seeing it happen, but it's not going to eliminate everything. I think you're going to see a lot more niche stuff. But some of the stocks on the AI front today are getting pummeled, right? I have been long Palantir for a while, and I already booked profits at 185. And I'm probably going to get stopped out of the rest of this position today. But you know what? I'm okay with that. It's been a good run. I'm going to have a nice profit on the second half of the position. My first half of the position was sold near the highs. It made a higher high, $5 higher. I don't really care about missing the exact high. Like I said, there's plenty of meat in the middle for me to make a living. And there is for you as well. And even getting stopped out with a profit. I mean, that's something that I can live with here in Palantir. But you can see here that we've had pretty much 5 days straight of distribution selling. Volume is starting to pick up on the sell side action here. So yeah, you could see Palantir drop to perhaps what would that be? 145, 140. And then that could end up being a low as well. So you have that name selling off some today. I've been looking at Tempest AI. That's been a really strong name. That's a stock that's notorious for Nancy Pelosi being heavily invested and involved with. I actually do have a position in this over in the $1 million challenge portfolio, and yeah, I think that it looks pretty good. You are starting to break above this resistance zone. And, again, resistance is just an area in the chart where demand or where supply exceeds demand. And so now that you've seen prices break above this resistance zone, we have the signal that demand for this stock has exceeded supply. It now becomes support. In other words, as long as Tempest AI can stay above, I would say like 68, 70, I think you got to favor the bullish side. Got to favor the bullish side of things. But a lot of these AI stocks are getting hit hard today. Even App11, this is another stock that I've had a position. I've had a position in for quite some time over in the $1 million challenge as well. So a lot of techs getting hammered. Quantum, seeing some selling today. I actually had to liquidate a couple of positions in that space to take some risk off the table, because these ones they do move quickly. They do move violently. IonQ looking a little bit defensive. QBTS, Qubit, Rigetti, all of these. I think that we are setting up for, at this point, the next big dip buying opportunity in some of these quantum stocks. And we know that they can run. We know that they can rip. We know that they're a very exciting and opportunistic sector to trade, filled with stocks that look very strong. So, I'm keeping my eyes on these as long as I can, because yeah, it looks very strong, I think, in the long run. And it's a technology of the future, guys. It's a technology of the future. So let's see here. Cigna implementing AI in place of traditional customer service representatives. Customer service is suffering. Yeah. Yeah, Ken's got 45% cash. Very nice. AI, yeah. How's that AI symbol doing? C3.ai. Yeah, this does not look pretty. This does not look pretty. Soundhound looks a little bit better. Okay, but even here, lower high with respect to the longer term trend. So yeah, we might have some issues here in the near term. I mean, with a lot of these tech stocks selling off. Actually, the portfolio is off the lows of the day. One of the areas I'm seeing some, we talked about rate sensitive stuff. RKT has been pretty strong. Coming up off looks like it's trying to form a higher low here. RKT's been good. I always forget the United Wholesale Mortgage. United Wholesale Mortgage. I think it's UM. What is that ticker symbol? Let me see. I'll find it real quick. 1 second. I always forget that one because I'm looking at some of these mortgage stocks. Okay, let me see. UWMC is what it is. There we go. UWMC. Yeah. These have been beaten down really hard. Then you have companies like Mr. Cooper. Keeping this one on my radar too. Mr. Cooper, which has actually been at the top of the Trinity Trade watch list for over a year or close to. Stock has just been absolutely incredible. I mean, you're talking even amidst rising interest rates. This is a mortgage service provider. The stock has gone up, what, 4x, 5x? Absolutely incredible what this stock has done. So this has been the leader in that space. So yeah, I think that even with the government looking to pawn off Fannie Mae and Freddie Mac, I mean, this chart doesn't look all that bad either. I mean, let me see here. I'm gonna set an alert on this at 11:49. Okay. Yeah. Okay. This is pretty interesting here. We might have a trade setting up. And again, the reason I'm open to this is because it's more rate sensitive. I think bonds are going to, let's see, 750, 854, so $15. So I'd be looking at. So let me see here, 1550. I think we have a trade set up here, guys. We have a trade set up. 1034. Okay. All right, so here's a trade idea, my Theo friends. Hasn't Mr. Cooper been sold to Rocket? I think you know what, Les? I think you're right. There was some, or maybe they bought something. There was something, yeah, because I know Rocket bought Redfin. You're right, Rosario. There might have been something with Mr. Cooper. So okay, here's a trade. Buy FNMA on a close above 1149 with a stop loss on a close below 1034. Target 1550 to reduce. So that is a trade idea. for you. And then 1034, and then target 1550. Okay. So yeah, I'm glad we were able to come away. Federal National Mortgage. Someone always needs to count the number of characters in a name to make sure they're not making a donkey of themselves. You think Rocket could be buying both? Yeah, Dan Gilbert's the richest man in Michigan now. Can't tell you how many people I know that I went to high school with that have actually built out pretty impressive careers working at Rocket. I mean, they work them like dogs. They work hard, but they do make money. They are paid for their efforts. So, okay, a couple other things I wanted to share with you, even on the crypto front. Scott Bessent posted this tweet today, or it might have been yesterday, actually. Yeah, today's the 19th. So Scott Bessent said, implementing the Genius Act is essential to securing American leadership in digital assets. Stablecoins will expand dollar access for billions across the globe and lead to surge in demand for U.S. treasuries, which back stablecoins. It's a win-win for everyone involved, or win-win-win for everyone involved, stablecoin users, stablecoin issuers, and of course, the U.S. Treasury Department. Why, guys? Well, we talked about this recently last week here at TheoTRADE. I wrote an article about it in the Sector Bullseye newsletter that you can find on the TheoTRADE website for free. And basically what the recent legislation did is say, hey, if you want to issue stable coins, you have to use treasuries or dollars as reserve assets. And so what that does is the more people that buy these stable coins, especially in from abroad, right? They buy these stable coins, it's indirectly funneling money into the treasury, into the bond market. So it really is a backdoor bait and switch, brilliant form of financial wizardry that's going to work until it doesn't. Because as I discussed in that article, when that Luna Sol stablecoin blew up a couple of years ago in the last Bitcoin bear market, the other stable coins like USDC and these other crypto stable coins, they held up all right, but there was a lot of stress. A lot of them held. But now with all these big players in the space, more borrowing going on, I could easily see the next great financial crisis coming from Bitcoin crashing, leading to some of the pegs in the stablecoin market breaking, creating a liquidity crisis. We've seen it all before. So if you don't fully follow everything I just said, that's okay. We're going to be talking about it a lot more in time. So stay tuned, stick around, because that does seem to be the next big source of financial market drama. So the Chinese comeback. Yeah, like I said, I was in touch with a colleague over in Hong Kong earlier today. It's obviously not Shanghai, but not too far away. But the markets follow similar patterns, and we just hit a 10-year high in the Shanghai Composite today. Very bullish price action, and I think this is one of the best opportunities in the market in a major economy, right? Like China's not, they're not a spring chicken anymore. Like they're a developed market. It's funny how we still we classify them into emerging markets. No, they're not. They're not an emerging market. They're the second biggest economy in the world. And so, yeah, seeing their market come back to life and hearing the optimism coming from people in that are trading that market, investing primarily in that market, I think says a lot. So we're going to be talking a lot about that more here. The terrific 10 is something that I want you to become comfortable with. Meituan, one of those names, been getting hit pretty hard. Baidu is a name I'm watching. This is like the Google of China. Okay. Oh, look at the name of the thinkorswim screen. That's funny, Paul. How do you make money in stable coins when they are pegged? It's like people, the same reason why people put money in a savings account. It's the financialization of treasuries using stable coins. You're exactly right, Rod. That's exactly it. So anyways, Baidu is like the Google of China. Okay. And you just look at this stock. Look at this stock. It's done nothing for years. For years. I think this comes alive. I think that we have a catalyst in this um, coming tomorrow potentially with earnings. And so if we see a nice breakout in Baidu above this resistance zone, then I think that is the bottom, and I think we're going to see a big move higher. Of course, Alibaba, another big household name to watch there as well. That actually just turned negative on the day. Hesai Group, another Chinese name, I think related to in the AI space, if I'm not mistaken, or is it biotech? I might be thinking of something else. Z-Lab was one of those biotech names that actually looks still pretty good, believe it or not. So again, I'm bulled up on China, guys. I think that it's going to be a real opportunity for us to get the next big bull market. The next big bull market, I think, will be in China, and I think the rate cuts are going to be the catalyst for that. So, with that being said, we have about 12 minutes left together, and so what I would like to do now is actually, let me see here. I want to screen the healthcare sector because that's where we've seen some stuff come to light. See if there's any opportunities. As it turned out, Liquidia, yeah, that was in the Liquidia is actually classified into healthcare pharmaceuticals. I thought it was like an insurance, but anyway. Alnilam Pharmaceuticals, one of the best rated healthcare names here. Oh wow, look at this stock, very strong, very strong, very strong. Okay. Yeah, there's not really a trade that we can take on this right now. However, it does look at that, just absolutely insane. Wow. 3x in the last 2 years, basically. Then we have Celsuity. Celsuity. I haven't seen this one, but it's screening very well. Okay, well, that's why. A huge gap up higher. Not really a trade that we can take on that right now. Insmed, been very strong. Yeah, look at that. It was at $70 back in June. Very clean price action. Very clean, very bullish. Regional Pharmaceuticals. Oh, what is RIGL? Okay. 28, that was the level to watch. We cleared that. Okay, well, this one's already made its move, so. But that's quite a base it broke out from. 725. It's probably still got some legs. Okay, we'll look for the next one. Sedera Therapeutics. I haven't seen this one. Sedera Therapeutics. I've been talking about how I think biotech's going to benefit greatly from the rate cuts too. This one trying to come out of a bear market. Wow, look at that. I'd be really interested in this one above like 70, 75. Okay. Rhythm Pharmaceuticals, RYTM. Yeah, that one's already made its move, really. Oops, I wanted the monthly. Yeah, beautiful bull market there. higher highs and higher lows. Mari wants to look at MEDP. What does Mari have up his sleeve today? Yeah, this was a bull flag. So you have the flag pull here, that's what we like to call it, and then your flagging. Okay. Very bullish price pattern. These patterns can last up to several weeks. Oh yeah, this looks very good. We most definitely need to have an alert on this one. Good looks, Mari, 477.73. So one of the things about healthcare and biotech that it's something that you're going to have to overcome if you want to participate in this in the bull market that's coming in biotech is that there's going to be high share prices. And so sometimes people are reluctant or they hesitate. Oh, the stock's already at 500 or 600 or 250. Listen, it's the year 2025. You can buy fractional shares at your broker. Don't worry about that. Remember, we're thinking in terms of percentages. We're not thinking in terms of the share value because you can buy a half a share or a quarter share or a 1/3 of a share now. That's the way the world has evolved and changed. Okay, so it's another good example of that financial innovation. Go to options as MDGL, Madrigal Pharmaceuticals. Yeah, this has been a good looking one too. I actually had an alert on this a few weeks ago that then it broke out from. Let's see, 350, 450 is the target. So I don't think it's really worth a trade right now, but it does look like a beautiful stock. That looks nice. Yeah, might have another $50 of upside. Don't look at VKTX. What happened? That was a stock that down 41%. Actually did pretty well on it back last year for a period of time. Yeah, we actually rode this wave up. Who remembers that? I know Paul was in that trade, but do you remember the big VKTX trades that we had? Yeah, but that one fell apart. Johnson and Johnson. Johnson and Johnson. That looks pretty good too, actually. Is it coming out of a bear market? No, it's trying to continue. This looks good. You know, a lot of these RNA, Avidity Biosciences has been looking at that too. Yeah, I mean, this looks pretty darn good. Pretty darn good. What else we have? Tonix Pharmaceuticals, TNXP. Okay. TNXP. So you have 19. Yeah. Getting hit hard here. I'm surprised it screened so well. Eurodren Pharmaceuticals. Okay, 22. No. Star Surgical. STAA. Think about this kind of looks like bought out action. So we're gonna overlook that one. Smith and Nephew medical equipment. Oh, SNN. Oh, nice. That's when I talk about a bullish breakaway gap. There it is. Wow, that's a nice setup. This is one. Had it been on my radar, yeah, this would have checked off the boxes. RXRX, yeah, that one. Let's take a look at that. Recursion Pharmaceuticals. I would avoid this one for now. I would avoid downtrend, lower lows and lower highs. We'll see. Here's the thing. If lower interest rates can't turn a lot of these stocks around, then they're toast. There's really just no other way of saying that realistically. Okay. Because a lot of these companies are hanging on by a thread, right? They're hanging on by a thread. ITM VST, it's utility. There's nothing really to do there. I think, you probably get a little bit of selling here. Higher low. Tiva, Avi, or is it Avi or Ari? Avi, yep. Yeah, biotech can be brutal, but you want to talk about having like the biggest winners. I mean, it's right up there with tech. Actually, biotech, I would say you can have even bigger winners in a shorter period of time, but you do get those big gap downs. So I'm not really a big fan of doing like big positions in biotech. You don't need to, because if you put a 5% in and stock goes up 200%, well, that's going to be padding your portfolio returns pretty well. Tiva, yeah, above 18, I think it looks a little bit better. Okay. So, yeah, that's not so bad. I am almost done here. We have Garrett coming up next. I had a nice segment with Garrett. Appreciate him having me on earlier. We talked a little bit about where some of the opportunities are coming in this market. So yeah, great segment that we got there before the market opening bell. Mirum Pharmaceuticals, that's been one that I have watched in the past. Mirum Pharmaceuticals. Oh, there you go. That's why it broke out. Look at that. Amazing. Beautiful move. Well, can't chase that now. Yeah, very clean, higher highs and higher lows. Artivian, AORT. Well, I wonder if it has something to do with the aortic valve or the heart. Yeah, there you go. So the moves are happening there, guys. The moves are happening. So with that being said, I do want to conclude our formalities today. We talked about here today on the 19th day of auspicious August, how protection comes with a cost. Understand the risk in that protecting yourself is not free. So it's up to you to weigh out how you want to go about doing that. We talked about how to measure AI sentiment a couple weeks ago. AGI was going to eat us all. Then last week, ChatGPT failed. This week, AI is a bubble and it's all going to implode. Meanwhile, we're shaping up for a setup for a bottom here in the coming, I'd say a week or two. We're in the eye of the crypto hurricane. The stablecoin news remains very important, especially when it comes to the treasury market. Big opportunities in China. Oil's time is almost approaching, but you might have one more washout depending on how the geopolitical situation and the peace talks go in the coming days. So with that all being said, Garrett is in the house. I'm going to turn it over to him. How's it going, Garrett?
Good. What is the stablecoin news?
Well, it was just Besant talking about how the Genius Act is a win-win-win for everyone, and it gives people internationally a way to plug into the dollar ecosystem through treasuries. It's another way for the treasury to secure funding from people abroad, not necessarily governments. And they're kind of using it as a backdoor way to sell bonds, because they're basically forcing these stable coins to use treasuries as reserves.
That's exactly right. And what is interesting about that is that helps increase leverage in the financial system. So that's how you end up with more technology stocks going to all-time highs. They also, I don't know if anybody knows this, but there's a SALT conference going on right now out in Wyoming, Skybridge Alternatives. And very interesting to see a lot of crypto names selling off the way they are right now. Given the fact that that is happening in Jackson Hole 2 days before the Fed meets, it's all the same people meeting. Trump and Waller and everything else. I don't believe in coincidence, so I look at this and I think, okay, people are starting to position themselves ahead of Powell's speech on Friday, and you could see the jitters starting to really form in the options market. There's going to be some fireworks next week.
I'm with you. Yeah. All right, Garrett. Well, thanks again for having me on your show this morning. It was a good segment, and I'll get out of your way and let you run with it.
Looking forward to your 2 o'clock tomorrow.
All right. Thank you.
All right. Thank you. All right, everybody. I hope you're having a good day, and we're watching this market sell off, continue pull back.